Anyone who has looked at renewable energy for their property has probably learned that there is a tax credit associated with such a project. This is through the federal government, and it is called the Incentive Tax Credit. The ITC was first established back in 2006 at a level of 10% on any renewable energy project. That percentage has varied throughout the years, but last year, with the passage of the 2022 IRA legislation, that credit has been extended to a level of 30% from the years 2022 through 2032. It will start to diminish again after that and possibly disappear in 2035. But right now, 30% on any renewable energy project. So let's take a look at an example of how the ITC might work for you. Let's say you have a commercial property, membrane roof, flat membrane roof, so we're going to use a ballasted roof mounted system and a grid-tied inverter, so no battery storage, and we're sizing the system at 100 kilowatts. You have agreed to pay a contractor $190,000 to put this system onto your property. That payment, $190,000, is paid up front before the ITC is brought into play at all. The ITC gets involved the next tax season. So say you did this project in 2023, for the 2024 tax season, you're going to be able to claim the 30% ITC at $57,000 as a credit on your taxes or against your tax burden. It's not a refund, it's a credit. That gives you a net cost on the system of $133,000. However, the credit that you qualify for cannot exceed what you owe in taxes. So let's say in 2023 you only owed $40,000 in taxes. This means you have a balance of $17,000 on your credit. That balance can be rolled over to the following tax year or any consecutive tax year until it is gone. So there are certain requirements for eligibility here. You must be a U.S. citizen. You must own the building or the land that the array is going to be situated on. And you must own the system. This means that you are going to directly use the power. You're paying for the system. You're not just leasing property or space for somebody else to put a system in and take the power for themselves. So the interconnection agreement with the utility is in your name. This ITC is stackable with other incentives. So let's look one more time at our $190,000 system that we were talking about. We claim on our taxes the following year $57,000 for the credit. Now this includes everything that is associated with the project. It is 30% off materials, labor, any paperwork like permitting, interconnection, even things like freight and taxes, and any upgrades that may need to be made because it's something required to safely connect the solar or install the solar. So maybe a new roof might be an example, or an upgraded size on your system from the utility. So instead of 400 amp service, maybe you need 600 amp service, something like that. All those things can receive 30% off under the ITC. Now let's say you're also in an area or have qualified for some kind of grant money in the form of $20,000. So this could be through a city, some kind of local jurisdiction like that, or maybe you've received a USDA REAP grant through their program. So that gets added in addition to the ITC, and that now has your net system at $113,000. The Inflation Reduction Act also added in extra incentives for renewables at a 10% level each. And there are three main categories that these are falling into. The first one is domestic content. That means that at least right now, 40% of the material and the labor going into your project come from the US market. So this could be things like domestic solar panels or racking. It could be the percentage of labor going into manufacture the components of your system and install your system. If those things can add up to 40% of the total project cost, you would qualify for that domestic content bonus. The second category is called an energy siting location. This specifies areas that right now are mainly fossil fuel areas, like a coal mining community is a good example, where they're trying to incentivize people to embrace renewables and maybe create jobs in the renewable energy market to replace some that have been lost to a declining coal mining operation. So that's the second bonus that is available. The third category is low income locations, and this is all based on the last US Census report. So these categories are all still being defined. They're getting a little clearer each day, but as they are defined, they'll be published and ready to go next tax season, and it's something that you should talk through your accountant with if you decide to do a renewable energy project to make sure that you're taking advantage of all that you can here. So let's look at our example one more time with a bonus tax credit involved. So we have our $190,000 payable up front to the contractor. We have our base ITC credit, which was $57,000. And we live in a low income area, or our property is located in a low income area. And so we get an additional $19,000 off the cost of the system because of that business being situated in a low income area. On top of that, you still get your grant money that you had from either your local jurisdiction or the USDA in the form of $20,000. And this has now lowered the net system cost down to just $94,000. So as you can see, these things stack up very nicely, and they can give you a much better return on your investment if you take advantage of all of them. The other big change that was made under the IRA legislation is that nonprofits are now eligible to receive a one-time payment. Since they are not tax-paying entities, obviously they don't refer to it as a tax credit, but it's a one-time payment once a renewable energy project is complete. So this has opened up the market for this a lot more than it used to be. Places like universities, public schools, libraries, credit unions, any place that is considered nonprofit can now claim a credit as well. And this really puts renewable energy more within their reach oftentimes. So it's another clear benefit of this IRA legislation that was passed last year. So reach out to us today if you want to learn more about the ITC and how it could help you on a possible project, or reach out to your accountant. They would also be another good resource.